Good evening, everyone. Very good evening. So, we are live with another session. We are live with our fourth session of the CMA series. So, please quickly join in and let me know if the audio and the video is clear. So, today we are going to cover our next topic, that is overhead costing, another one of the most important topics of paper number 8. So, we'll wait for 2-3 minutes. Good evening, Smriti. We'll wait for 3-4 minutes. Let everyone join in, all those who wish to take the benefit, and then we'll start with our session, right? Ram Ram Abhishek. Come on, quickly join in so that we can start with our session as soon as possible. Good evening, Harshit. Let's quickly start with the session. Is audio and the video clear? All those who are joining in, please let me know. Thank you, Harshit. Thank you. Please do share with all your friends. Please do share as much as possible, as much as you people can. Keep sharing. Good evening. Good evening. Okay, we are still waiting for some more students to join in so that we can start with our session. We'll wait for 2 more minutes. At 4:35, we will start with the session, right? All those who are coming live, please like the video. This revision approximately, let's say 1 week more, approximately. Today we'll be covering overheads. Tomorrow we'll be covering cost sheet. Then we will move on to cost accounting systems also. Tomorrow most likely we'll be covering the cost accounting systems also. Good evening, Sonali. And then reconciliation also. As much as possible we'll try to cover, right? Quickly. Then unit and batch job costing. Then quickly we'll move on to contract, process, joint and byproduct, standard, marginal, budgetary, and service. So we have a lot to cover, but let's see. We're trying in between 7 to 8 days, right? Trying in between 7 to 8 days that we are able to cover the maximum part of it. Okay. So today we'll be covering overhead costing. In the today's session, we will be covering overhead costing. So shall we start with it? Okay, let's do it. All those who will be joining in, they can join in later on, right? Or they can watch the lectures later on also, right, sir? Okay, so what about overhead costing, sir? What is overhead? The first thing that you need to understand is what are overheads. When we talk about overheads, that means, sir, we are talking about all the indirect cost. Overheads is my all indirect cost, right? All indirect cost. Right now, what is an indirect cost? Indirect cost is The cost which cannot be identified in one unit of the finished product. The cost which cannot be identified in one unit of the finished product, whether it is a material cost, it can be a material cost also, it can be the labor cost also, and it can be my labor cost, or it can be my expenses also. So it can be any kind of a cost, but if that cost is not identifiable in one unit of the finished product, we call it as overheads, right? Good evening, Suresh. We call it as overheads, right? Now, what is the purpose of studying the overheads? What is, if I talk about the purpose, what is the purpose of studying overheads? The purpose of studying overheads. What is the purpose of studying overheads, sir? Why are we studying overheads? Because ultimately, whatever this indirect cost we are incurring, this cost is to be recovered from our customer. And how do we recover from our customer? If we anyhow, by hook or crook, by any means, we are able to identify this cost in the one unit of finished product. That is the ultimate goal of this overhead costing, that whatever the overheads are, whatever this indirect cost is, you have to make it identifiable. It is not directly identifiable in one unit of the finished product, but it is the role, the steps that you have to follow, through which you have to make it identifiable in one unit of the finished product, so that we are able to recover this cost from our customer, right? So the purpose here is to identify, make it identifiable, or identify it in one unit of finished product, right? One unit of finished product. And why it is important to identify it in the one unit of the finished product? To recover the cost from our customer. To recover cost from our customer, right? That is the main purpose of studying the overheads. Now, if I want to broadly classify my overheads, there broadly, if I say there are three types of overheads, right? Broadly, three types of overheads. One is the factory overheads, which are related to the production. These are my factory overheads. Then the second type of overheads that I have is admin overheads. Admin overheads. And the third type that I have is selling and distribution overheads. Selling and distribution overheads, right? This admin overheads can be further divided into the overheads which are related to production, and one is my journal administration overheads, right? So these can be further divided into production, administration overheads, and the journal overhead. The office and administration overheads, these are one and the same thing, right? Now, for the overheads purpose, what we do is, for the overheads purpose, we say the whole factory is divided into departments. The whole factory is divided into what? It is divided into departments, and the departments are further divided into two parts. Departments are further divided into two parts, right? One is my production department. One is my production department. That is the one which is related to the, directly related to the production of the finished goods. The second one is my service department. The second one is my service department. That is the department which is involved in providing the services to the production department, right? So service department is the one which provide the services to the production department, and production department is the one which directly is involved in the production of the finished goods, right? So this is my production and service department. After that, there is one kind of overheads which we call it as allocated overheads. What are allocated overheads? What are allocated overheads? Sir, allocated overheads are those overheads which are directly traceable to a department, which are directly traceable to a department, right? Sir, this doesn't make it a direct expense. I'm not saying it is directly traceable to a product. What I'm saying is it is directly traceable to a department. It is not directly traceable to a product, to a particular department. For example, if there are 4 different departments and all the different departments are having the different electricity meter, and when the electricity bill, we can directly identify that this electricity bill is for which department. This electricity bill is a overhead, it is an indirect expense. You cannot say that in the making of 1 unit how much of the electricity has been consumed. No, but you can directly trace it to a particular department, whether this bill is for the service department, whether this bill is for the production department, right? So this is allocated overheads. Then there is another term that comes, that is apportioned overheads. That come as apportioned overheads. One second. There is another term that comes into play, that is apportioned overheads. Now, what are apportioned overheads? Sir, the overheads which are not directly traceable to a particular department, right? Which are not directly traceable to a particular department but have to be distributed among the different departments, right? Distributed or apportioned, distributed among different departments, distributed among different departments on some reasonable basis, on some reasonable basis. Right? So apportioned overheads are those overheads which are not directly traceable to a particular department, but these are apportioned between the various departments on the reasonable basis. Now, reasonable basis can vary, right? This we have already studied, that what can be the reasonable basis. For example, for the rent, the reasonable base will be the area, right? For depreciation of the plant and machinery, the reasonable base will be the value of the plant and machinery. For a reasonable base for any canteen expenses, that will be based on the number of employees. So the reasonable basis we have already discussed about, right? And if any one of is having my books, all the reasonable bases are given there, that what are the various reasonable bases on which we allocate it. So what is the main purpose here now? Try to understand what is the main purpose of the overhead costing. Let's say there are 4 departments, right? So I divide the factory into 4 departments. I'm saying there is department P1, P2, S1 and S2. So P1 is my production department and S1, S2 are my service departments, right? P1, P2 are my production departments and S1, S2 are my service department. This is my finished good, right? This is my finished good, and here I have the overheads. Here I have the overheads. Now, what is the main purpose? The main purpose is that these overheads, we have to make them identifiable in the 1 unit of the finished product. But the problem here is, in between, there is a wall of the departments. So what you have to do, sir, we divide this into 3 parts, that you have to take 3 stairs to make this overheads identifiable in the finished good. So what is the first stair there? What is the first step? The first step is distribute all the overheads between the departments. Distribute all the overheads between the departments, and this first step is known as primary distribution. This is known as primary distribution. Clear? After that, what is the second step? The second step here is that whatever the cost is there in the service department, distribute the cost of service department among the production departments, right? And what we call it as, this we call it as secondary distribution. This we call it as secondary distribution, right? Now the whole of the cost is accumulated in the production departments. Now from this production department, because the production department is the nearest department to the finished good, the cost is taken to the finished product, and this process is known as absorption of overheads. This is known as absorption of overheads, right? This is known as absorption of overheads. So this is the main purpose. So the next topic, the first topic that we are going to start here, next topic that we are going to discuss is primary distribution. The next topic is primary distribution, that how do we go about with the primary distribution, right? How do we go about with the primary distribution? Now let's say there are 4 departments. There is a department P1, there is a department P2, there is a department S1 and S2. These two are the service department, P1, P2 are the production departments, right sir? So the first thing that you will be taking in the primary distribution, what will be the first thing that you will take in the primary distribution? That will be the direct expenses, sir. Direct expenses. Direct expenses are not my overheads. Then why should I be taking the direct expenses? But you have to take the direct expenses of what? Of only and only the service department. Why, sir? Why the direct expenses of the service department are to be considered? Because the direct expenses of the service department are indirect for the production department. And what we are concerned with is, if you have to identify the overheads in 1 unit of the finished product, you have to identify all the indirect cost of the production department. So direct expenses of the service, if there is a canteen, there is a bread pakoda in the making, right? The potato used in that bread pakoda, that can you identify that if you are a t-shirt manufacturing unit, that in the manufacturing of one t-shirt, how much of the potato has been used in that? No, sir. Right? So that potato might be a direct expense for the service department, but for the production department, it will be an indirect expense. Good evening, GVR Studio. Clear? It will be an indirect expense. So this is very important, because many of the times this is a very common mistake that is done here, right? So you do not have to commit it. The second thing is, next what you will be taking is allocated overheads. Next what you will be taking is allocated overheads. Allocated overheads of all the departments. So we have discussed what are allocated overheads, right? So the overheads which are directly traceable to the individual departments, you will take all those overheads. Those are known as allocated overheads. Clear? The next you will be taking is what? The next you will be taking is apportioned overheads. Next you will take is apportioned overheads of all the departments. That means the various overheads that you will be given in the question, you have to apportion those overheads on some reasonable basis. So here you will take the basis also, right? It is direct, right? It is allocated. Here you will take the basis. Now if it is rent, for example of the apportioned overheads, let's say if it is rent given to you, said what will be the area, what will be the basis? The basis will be the area. On the basis of the area you will allocate it. For example, the depreciation is given to you on plant and machinery, then what will be the basis? The basis will be the value of plant and machinery, right? So in this basis you have to prepare your primary distribution and find out. From here you will find out the total overheads of the various departments, right? So this is what is primary distribution. Clear till now? Just let me know if it is clear till now. Quickly let me know till now it is clear, then we'll move on to the secondary distribution. Okay, let's move on to the next one then. Let's move on from the primary distribution. Let's move on to the secondary distribution. Let's move on to the secondary distribution. Right? Now, what is secondary distribution? Sir, problems we are not doing here. Surampalli Nandan, we are not solving the problems here, right? We are just refreshing our concepts related to this, right? The problems have already been done on the YouTube also, and there is a paid course in which all the problems of the ICMA material has been done. So we are not focusing on the problems. If we start solving the problems, then we'll not be able to complete this revision. Important is revising the concepts, okay? So now this secondary distribution, I divide the secondary distribution in broadly three parts, right? If the asset value, not on the floor area, the reason is that depreciation is not calculated for the land, right? So something will be given, either furniture will be given or a plant and machinery will be given. So you have to identify what is that one thing that is given for the depreciation purpose. Something will be given, some value of the asset will be given which is depreciable, right, Smriti? Okay, now secondary distribution, I divide it broadly into three parts. The first part is my direct distribution. The first part is direct distribution, right? The here I'll take step distribution. Okay, let's discuss about first about the direct distribution only. First, let's discuss about the direct distribution only. What is direct distribution? He says here, whatever is the total cost of the service departments, it will be distributed between the production departments, ignoring the fact that one service department is providing the services to another or not, right? So what is direct distribution? If you have four departments, P1, P2, S1 and S2, S1 and S2, right? You have four departments with you. Fine, sir. Now, what will you do in this case? Let's say you have, let's say you have 1,000 rupees here, 1,000 rupees here, right? 500 here and 200 here. Now, what do we consider in this kind of a question? Sir, this 500 will be distributed between P1 and P2. This 200 will be distributed between P1 and P2. Simple, straightforward, right? Whether S1 has provided some services to S2 or S2 has provided some services to S1, we are not going to consider that. That is to be totally ignored, as simple as that. So this is the most simplest form. That is the direct distribution method. The second method is step distribution method. The second method that we are going to follow is step distribution method. The second is step distribution method. Now, what is the step distribution method, sir? What does the step distribution method says? It says that if you have multiple departments, for example, P1, you have P2, right? Then you have S1, then you have S2. And let's say S1 is providing the services to S2, right? S1 is providing the services to P1 also, to P2 also, and to S2 also. But whereas the S1 is providing the services to P1 and P2 only, S2 is providing the services to P1 and P2 only. It is not providing any services to S1. So in this case, what you will do is, in case of secondary distribution, you will distribute. What you will do is distribute S1 overheads first, right? So first you will distribute the overheads of the S1 between P1, P2 and S2, right? And then after that, whatever the total overheads of the S2 will be distributed then between P1 and P2. S2 will then be distributed between P1 and P2, right? So this is my step distribution method. The third one that you get here is the reciprocal service method. Reciprocal service Reciprocal service method. Now, what does this method says? This method says if you have four departments, let's say P1, P2, right, S1 and S2. Now, in this case, what is happening, sir? In this case, the S1 is providing the services to S2 and S2 is also providing the services to S1 besides P1 and P2. Besides P1, both the departments are providing the services to production department. That is absolutely fine. But besides that, they are providing the services, 10% services, 10% services. They are providing equal services to each other also, right? So in this case, the reciprocal service method, there are two methods. This is further divided into two methods, sir. One is the repeated distribution method. One is the repeated distribution method, right? And the another one is the simultaneous equation method. Simultaneous equation method, right? So basically two methods are there for this. What is the repeated distribution method? He says that if you have, let's talk about the repeated distribution method. Let's say you have P1, you have P2, you have S1, you have S2, right? Now, what you will do is, let's say first here you have 1000 rupees, here you have 1000 rupees, here you have 500, right? Here you have 500 rupees, one second. And here also you have 500 rupees. So what will you do? You can start with any of the departments. You can start with either S1 or you can start with either S2. You can start with any of the departments. There is no issue in that, right? Let's say we start with the S1. First we'll distribute S1. Let's say you have to distribute, let's say it is 300, 300, 500, it's okay, sir. You have to distribute between this. You distribute here 200, right? 200 to P1, 200 to P2, 0 here and 100 here. Right? Now, what is the total cost here? Total cost here is 600. Now, the 600 will be distributed between P1, P2 and S1. Let's say it is 300 here or 250, 250. Let's say it is 250 here, 250 here and 100 here, right? Here it will be minus 600. Clear? Now, here you will get 0, but here you will get a 100 rupees value. Now you will keep on distributing like this until unless you get a very small figure, which we call it as a negligible amount, right? Until and unless you get a negligible amount here. Until unless you get negligible amount. Right? Now what is this negligible amount, sir? Is there any standard which is given for negligible amount? No, sir. It can be 5 rupees, it can be 10 rupees, it can be up to around 50 rupees. That's it. Up to around 50 rupees, not more than that, is not normally considered to be a negligible amount, right? So you keep on repeating. Now, simultaneous equation method, you have to make two equations, sir. You have to make two equations. That service department 1 is equal to overheads plus whatever the percentage is given. Let's say 10% services to S2, right? Similarly, you will make an equation that is S2 is equal to overheads plus whatever the part of services being provided to S1. So you will have to solve these two equations now. You have to find out the value of S1 and S2. That is the total value of service department. Then they are distributed between P1, P2 and if there is P3 or whatever it is, right? The percentage in these kind of questions, the percentage of the services being provided by one service department will be given to you, right? The percentage of the services, how the question will be given to you, you will find this kind of a table in which the production departments will be there, right? You will be given like P1 is there, P2 is there, S1 is there and S2 is there. So he will say that S1 department is providing, let's say 30% services to P1, 40% services to P2 and 30% services to S1. Obviously, sir, S1 department will not give any services to itself, right? Then talking about S2, he says 50% will be given to this Then 30% will be given to this and 20% is being given to S1. Right? So these kind of a things, in the question you will be given these kind of percentages. Now this S1 is providing the services to S2, so right, and S2 is providing the services to S1. Clear? So this is all about the secondary distribution. These are the three various methods of secondary distribution. Any doubts up till this point? Just let me know quickly. No, Samriti. In direct distribution, we will not apportion. That is what I told you, na? In direct distribution, forget about this part. In direct distribution, the S1 will be distributed between P1, P2 and S2 will be distributed between P1, P2 directly to the production departments only, not to the service departments. The service departments have no role to play in that case, right? In case of the direct distribution, we ignore the services being provided by one service department to another service department. Clear? Okay, moving on. So we have covered basically two steps. One is the primary distribution, second one is the secondary distribution. Now we move on to the next last step, that is absorption of overheads. That is absorption of overheads. That is absorption of overheads. Right? So this is going to be the last step, that is absorption of overheads. Now, what is absorption of overheads? That means now you have collected all the overheads. Through secondary distribution, what you have done is you have collected all the overheads in this particular area. Now, the next step is to take the overheads from this area to FG part. This is the next step, to take the overheads from the production to the finished goods. There are various methods for the absorption of overheads, right? So we'll discuss the various method. The first method is rate per unit of output. Rate per unit of output, right? So what is rate per unit of output, sir? That now the absorption is done on the budgeted data. Budgeted data means on the previous experiences. In the last month, you say that I manufactured 1 lakh units, and for those 1 lakh units, my rate per unit, my overhead rate per unit was 10 rupees, right? So you will say this month also it will be 10 rupees only, whatever the number of goods I manufacture, this month also it will be 10 rupees. That means if in this month, if you manufacture 2 lakh units, you will say 20 lakh is my overheads. That is absorbed overheads on the basis of the budgeted data, right? So here, how you calculate the overhead rate? How you calculate the overhead absorption rate? Sir, the overhead absorption rate is calculated as budgeted factory overheads. It is calculated as budgeted factory overheads divided by the budgeted number of units. Budgeted number of units, right? For example, I'll just quickly take an example regarding this. If you want to take an example, for example, in the month of June, in the month of June, you manufactured how many units? Let's say 1 lakh units, right? And in that case, your overhead cost is, let's say, 10 lakh rupees. Your overhead cost is 10 lakh rupees. So can you tell me what is the overhead rate per unit? What is the per unit cost of overheads? That is rupees 10. Clear? Now, in the month of July, that means you say that whatever is my number of units, my overhead will be 10 rupees per unit. That means you have identified here with 1 unit that in 1 unit the overhead cost will be 10 rupees. But in the month of July, now if you manufacture, let's say 2 lakh units, so what will be your overhead cost? What will be Your overhead cost based on the previous experiences, it is going to be number of units multiplied by 10 rupees, that is 20 lakh, isn't it? Now this 20 lakh is what? This is what I have this is what I have absorbed. This 20 lakh is what? 1 second, guys. Sir, this 20 lakh is what? 1 second, 1 second. We'll have to take a 2 minutes break. The software has hanged. Okay, wait for 2-3 minutes, right? We'll continue. Wait for 2-3 minutes. There is some technical error. This pen is not working, or the tab is not working, I would say. I don't know. Wait for 2 minutes, okay? We'll be back very soon. Just wait for 2-3 minutes. Let me restart it. Sir, it has completely hanged. Don't know. Okay, let's restart it. Okay, don't go anywhere. Don't go anywhere, sir. We'll be just restarting it and then we'll continue with our session. Till then, you can have some water and everything. It will take just 3-4 minutes. So this overheads part is very important from the examination point of view, right? So you have to be very careful with this thing. Overheads, in the overheads, distribution can be asked in the examination. In the overheads, if you talk about absorption, we will be discussing about the machine hour rate. Machine hour rate is very, very important. After that, one topic that we will discuss is under and over absorption of overheads. That is, again, these three things are important, right? Either if we talk about the distribution of the methods, in that I would say primary repeated distribution or the simultaneous equation method, that is a reciprocal method. This is the most important one. This is the most important one, right? So focus more on these three things, because by direct distribution or by other things, it is comparatively easier. Okay, we are almost ready. Theory of this chapter, not much, not much. Theory बहुत ज़्यादा इसमें बनती नहीं है. That is the thing. Theory, I won't say that lot of theory will be asked. No, sir. Not much of theory can be asked in this particular thing. Okay, so now we are back. So this is what we were talking about, that in the July, now on the past basis, you say that my overheads will be 20 lakh, right? But your actual overheads can be different. Your actual overheads can be different from this 20 lakh. It is not necessary that it is going to be 20 lakhs only, right? Theory, ज़्यादा अगर मैं बात करूँ, theory can be asked from the first chapter, then it can be from the material costing also, JIT, ABC, these kind of questions, theory questions can be asked. Then from the on the labor turnover, the causes of labor turnover, this kind of a theory can be asked, right? In overheads, if you talk about theory, if you check, Abhishek, you have the book here with me, the capacity, idle capacity, only just one question. From overheads, the less chances of theory being asked, right? Abhishek, you already have the books, my books now. In that, the additional theory part which is given with every chapter, just cover that. Okay. Okay, so this was the first method, that is the rate per unit of output method. Now moving on to the second method. Let's talk about the second method now. The second method is percentage of direct material cost. This is percentage of direct material cost, right? In this case, how the overhead rate is calculated? Overhead absorption rate, that is budgeted factory overheads, divided by what? Budgeted material cost. Which material cost? Direct material cost. Budgeted direct material cost multiplied by 100, right? So this will be on the basis of the material cost. Similarly, the third method will be percentage of direct labor cost. Percentage of direct labor cost, right? In that case, the overhead absorption rate is calculated as, sir, these are mediumly important, I would say, these methods. That is why I'm quickly going through with this. Budgeted factory overheads, everything has to be budgeted for what? For the absorption of overheads, divided by budgeted direct labor cost multiplied by 100, right? So similarly, the fourth method will be on the basis of prime cost. The fourth method is percentage of prime cost, right? In that, the rate is calculated as budgeted factory overheads divided by budgeted prime cost, right? Multiplied by 100. The next method here is direct labor hour rate. Direct labor hour rate. Now, the difference between this method and the labor cost method, in the third point, we have done the labor cost percentage. But here we are saying on the basis of the labor hours and not on the labor cost, right? So it will be budgeted fixed overheads. Budgeted factory overheads divided by budgeted labor hours, right? Budgeted labor hours. Now this is not a percentage, this is the cost per hour. In the percentage, we are calculating only when we are comparing the cost with the cost, right? Here we are not comparing the cost with the cost, here we are comparing the cost with the hours. So we cannot calculate it as a percentage, right? We cannot calculate it as a percentage. Now the last one and the most important one, that is the direct machine hour rate. This is direct machine hour rate, right? Now how it is calculated? In case of a machine hour rate, you have to calculate the machine hour rate, sir. How it is calculated? In this case, we calculated the budgeted fixed overheads, budgeted factory overheads, not fixed overheads. Budgeted factory overheads divided by budgeted effective machine hours. Effective effective machine hours. Now this is important, sir. I'm using the word here effective, right? I'm not directly using the budgeted machine hours. I'm using the word effective machine hours. Now you can get a separate question on the machine hour rate calculation, which is very important. You can get an individual question of 5 marks on the machine hour rate, 8 marks on the machine hour rate, 6 marks on the machine hour rate itself, right? Now, how to calculate the machine hour rate? If you are asked to calculate, if you get a question on the calculation, calculate machine hour rate. How to calculate this machine hour rate, sir? The first step that is there in the calculation of the machine hour rate that you have to follow is, the first step is calculation of effective machine hours. Calculation of effective machine hours. How this effective machine hours is calculated? That is total machine hours for which the machine is running. Effective machine hours means those number of hours for which the machine is actually involved in the production of goods, right? It is actually involved in the manufacturing of goods, those number of hours. So how do you calculate it? Total machine hours minus the servicing time or the maintenance time, we call it as, right? Minus the servicing time minus the setup time, minus the setup time, right? This will give you the effective machine hours. Now, one point regarding this setup time, the setup time can be productive and can be unproductive, right? So it depends upon the question. If the question specifically mentions that the setup time is productive, you have to take it productive. But if the question is silent as to the setup time, you have to take it unproductive. Simple, right? You have to remember this thing, that if the question is silent, the setup time is unproductive and no power and fuel is consumed during the setup time. This is very important, right? That if question is silent, if question is silent, then setup time is unproductive and no power and fuel is consumed. No power and fuel is consumed during this, right? So this is the first step. Always, it will always remain the first step. Now the second step, what will be the second step, sir? The second step will be the calculation of the total overheads, right? Calculation statement of calculation of total overheads, right? So how this calculation is done, sir? Total overheads are divided into the fixed overheads. You can divide it or you cannot divide it. For example, the fixed overheads can be, what can be the fixed overheads related to the machine? It can be the rent of the machine, right? If it is on rent, it can be the rent of the machine, right? Or it can be the depreciation of the machine, right? Or it can be the repairs and maintenance of machine, repairs and maintenance of machine, right? So all these things can be there as the fixed overheads, right? So you will calculate the total fixed overheads. Then the next what you will get is variable overheads. Next what you get is variable overheads. Now in the variable overheads, you can get many things like depreciation if it is based on the usage. Depreciation can be there if it is based on the usage, right? And many other, power and fuel expense can be there. Power and fuel can be there. So this way you will calculate the variable expenses. From here, what you will get is total overheads. What you will get is total budgeted overheads. Total budgeted overheads. Now you will calculate the machine hour rate. From here you will calculate the machine hour rate. Machine hour rate is total budgeted overheads. Total budgeted overheads divided by effective machine hours. Divided by effective machine hours, right? So this is how the machine hour rate question has to be done. Now be very careful with one thing. If you are not sure about the distribution between the fixed and the variable overheads, do not make the distribution. Do not make the distribution, right? As simple as that. Just write down all the expenses, all the overheads which are given to you, and finally divide it by the effective machine hours, right? Please do not commit the mistake in this case. Now, in some of the points or in some of the cases, you will find that they are dividing this fixed overheads with not effective hours. They are dividing it with the total hours, with the total machine hours, right? To calculate the machine hour rate, that is the one rate, and this fixed overheads, they are divided on the basis of effective machine hours. This is also correct. This is also correct, right? Why, sir? He says because whatever the fixed overheads are, those are not dependent upon whether there is any servicing time or the setup time. Those overheads will be incurred in any of the cases. That is why those overheads are taken on the total machine hours instead of the effective machine hours. But in most of the cases, you will be taking the effective machine hours only in the examination. Do not confuse with this thing. But why I have told you is that in case you find anywhere while you are revising, if you find anywhere, this is the scenario, right? Otherwise, what you do is calculate total overheads divided by effective machine hours only. Whether those are fixed overheads or whether those are variable overheads, you have to divide it by the machine hours only. You have to divide it by the effective machine hours only. Clear? Machine hour rate is clear? Just quickly let me know. Okay, so now we are moving on to our last topic. Now we are moving on to our last topic, that is very important again, under and over absorption of overheads. Under and over absorption. Under and over absorption of overheads. Right? Now, what is this under and over absorption of overheads, sir? Under and over absorption is, now absorption is taking place on the basis of the previous year data. For example, in the previous period, your machine hour rate, let's say you are doing the absorption on the, yes, the answer will be same, Abhishek, the answer will be same. Nothing to worry. If you don't divide it into fixed and variable, even then your answer will be same, because ultimately what you are doing is taking the total overheads and dividing it by effective machine hours only. Right? So if the machine hour rate in the previous period is rupees 10, right? Actual machine hours worked in the current period. Actual machine hours worked in the current period is 10,000 hours. Now what you will do is, in the current period, you say that my machine hour rate on the basis of the previous period, that for every 1 hour of the machine working, my overhead is 10 rupees. Now in this period, I am working for 10,000 machine hours. That means what will be the overheads? From here, what you will have is, from here you will calculate your absorbed overheads, right? What will be the absorbed overheads? That is 10,000 multiplied by 10, that is 1 lakh rupees. Now what is meant by this absorbed overheads? That means this is the amount you will recover from your customer. You will recover from your customer, right? On the basis of the previous period. But when you checked your books, in that case, your actual overheads in this period were 1,20,000. That means the amount which was to be recovered from the customer was 1,20,000, whereas you have recovered only 1 lakh. Right? So this is a scenario of under absorption. You should have absorbed 1,20,000, but what you are absorbing is 1 lakh rupees. You should have charged your customer 1,20,000, but what you are charging is just 1 lakh rupees, right? So what we say is, what we say in this scenario is that if the actual overheads, if actual overheads are more than absorbed overheads, if actual overheads are more than absorbed overheads, this is a case of under absorption, right? This is a case of under absorption. And if absorbed overheads, are more than actual overheads, then it is a case of over absorption, right? So over and under absorption. Now the point here is how to treat this over and under absorption, right? So the topic that we are going to cover here is treatment of under and over absorption. Treatment of over and under absorption. So what is the treatment here? There can be various treatments. There can be three different treatments, sir. There can be three different treatments here. The first is you need to find out what is the reason for that. If the reason is any abnormal reason, if the over or under absorption is due to abnormal reason or due to the mismanagement of the company or something, right? This is due to abnormal reason, then it will be taken to costing P&L account. Costing profit and loss account. Then the second case is, in this case, what you assume is that the under or over absorption of one period for any reason, one period will be set off against over or under absorption of next period, right? This is a quite a less scenario, then you have to carry forward it. That means he says in a particular period, if there is under absorption and in the next period there will be an over absorption, this is what we are assuming, that in the next period there will be over absorption and we will set off the under and over absorption, right? But this is quite a hypothetical situation. Now, if in the third case, if it is due to the genuine reason, if it is due to genuine price rise or fall, if it is due to genuine price rise or fall, right? Then what you have to do is, then you will calculate here the supplementary rate. Here the supplementary rate will be calculated, right? Supplementary rate will be calculated and the under and over absorption will be divided into three parts, right? Supplementary rate will be calculated. How the supplementary rate will be calculated? Supplementary rate will be under or over absorbed overheads, divided by the equivalent production units, That means, sir, who will absorb these overheads? Three types of inventory will absorb these overheads, right? Three types of inventory, this equivalent production units. One is the cost of goods sold. So equivalent inventory will be units sold, right? The second will be the closing stock of FG. And third will be the closing stock of WIP. Right? So this is how the equivalent production units will be calculated. For example, if he says that in a particular period you produced let's say 20,000 units, right? You sold 15,000 units. WIP 80% complete in all respects, 10,000. So how will you calculate the units now? You have to calculate three units. One is the units sold. That is 15,000. Next is closing stock of WIP. Now closing WIP will be equivalent to this percentage, that is 8,000. to the extent it is completed doesn't mean that the WIP has been completed into finished good. It means that to the extent of 80%, the cost has been incurred, whether it is material cost, labor cost, or overhead cost. To the extent of 80%, the cost has been incurred, but it doesn't mean that WIP has been converted into finished product, right? This is one confusion. Now, you people will tell me what will be the closing FG here. What will be the closing FG here? Just let me know quickly. Just let me know what will be the closing FG here. Let me know the value of closing FG. Units of, not the value, units of the closing FG. No. 15 minus 8. No, Samriti. Sir, closing FG. How will you find out the closing finished good? 8,000 is WIP. 15,000 is sold. Produced is, you manufactured the finished goods 20,000. Out of this 20,000, you have sold 15,000. So what is the finished goods that is left with you? So this will be 20,000 minus the number of units that you have sold, right? That is 5,000. Be very careful because this is one area of mistake. This is one very common area of mistake, right? 5,000, correct. Clear? So your closing FG will be 5,000, that is unit sold 15,000. Total produced is 20,000. Out of that you have sold 15,000. So what is left with you? The left with you is 5,000 only. So this is how the units to be calculated. And what will be the journal entry related to this? Let's write down the journal entry related to this. If it is a case of under absorption, then the entry will be the cost of sales. Nah, units. I'm talking about units only, Jayant. 5,000 is not a value. This all is what I'm talking about in units. This is not value, right? I'm talking about units only. So the cost of sale account debit, under absorption means the more cost was to be absorbed by these units, right? So how it is to be calculated? Units sold multiplied by supplementary rate, right? Then WIP ledger control account. Debit, that is the units of WIP multiplied by supplementary rate. Then FG, finished goods control account debit, right? That is units of FG, the 5,000 units multiplied by supplementary rate to factory overheads control account. Right? This is the entry in case of under absorption. So what will happen in case of over absorption? The entry will be reversed. The reverse entry will be there in case of over absorption. That factory overheads control account will be debited and the cost of sale, WIP ledger control and FG control account will be credited, right? So here I can say the reverse entry in case of over absorption of overheads. Right? Any doubts? So with this, the revision of overheads is done. This is what was required. All the important topics of the overheads we have covered, right? And I've already told you that what are the important areas of the overheads that you have to remember, right? So tomorrow we'll be doing the cost sheet and then the cost accounting systems also we might start with, right? Because cost sheet is a very small topic. The cost sheet, in the cost sheet there is not too much that we'll be spending 1 hour on only the cost sheet. Let's see, but we'll see whatever we can cover in that, right? There are small areas which need the discussion in that also. So we'll just see to that. Okay, no doubts. Okay, so with this, there are only a few students. All those who are active, they have said no doubts. That means we can close the session. We can close the today's session here, right? And tomorrow we'll meet for another session with only the limited students, the loyal students who are there. I have to come in there for them. Okay, so see you guys tomorrow. Till then, stay safe, stay healthy, keep studying, keep